The Dow Jones shows some weakness while the tech market is still pushing upwards. So let's have a closer look. What is the chart telling us? What can we expect for the next few days? Stick with me and see what the charts are saying to us. So let's have a look at the chart and see what we can expect there. To be honest, for most people seeing this video first, maybe it might be a little bit funny seeing, why do you think the charts are telling you the truth, what we can expect with the markets? It's not that the charts are telling me the truth. The chart is just translating the actions of the market participants. So if you see that the market participants are willing to buy at any price, then you can see a strong push in the market. And on the other side, when you see that the market participants are really weak, and then you say, oh, I'm not sure what I should do, then you can guess whenever a bad news is coming up or the market seems to turn a little bit, the market is turning strongly and gaining momentum. So that's something we keep in mind when trading the market. So I can recommend to you to follow this kind of videos and follow the chart technical ideas, because they give us a kind of warning system how the market participants will react in the near future on bad news, on good news. So this is helping us, for example, a lot while trading to find a good entry and of course to calculate our risk and the reward, of course, as well. So let's start with the S&P 500, and in this case we have the September contract already, because this week's Friday we have the end of the June contract. So in this case the American futures are switched 1 week ahead normally. So this is the new contract, but you can definitely use a continuous contract if you have one to follow the idea, of course. So what we see here in the S&P 500 or the E-mini S&P 500, you can see that this market is not pushing as strong as before. And this is in the big picture. I'm just pushing this a little bit higher for you. So it's a 4-hourly base, and you can see we had a strong move here, we had an ABC pattern here, we had a strong move here. Maybe this is a corrective pattern here, it is a sideways correction. It's a little bit difficult to understand that, but when you have one sharp correction here, the other one is a sideways. This is a little bit funny, because many people would say, yeah, but this is the sharp correction, isn't it? No, it's not, because this is normally not something typical for a corrective pattern. Normally it is something like an ABC pattern. And in this case you have this one higher than the previous one, which is a very typical situation for a corrective pattern named a flat corrective, for example, or a flat correction or a double sideways. We can switch to our database, and there we can see how it looks. Normally it is quite easy to see. We have an ABC to the downside, an ABC to the upside, and a 1, 2, 3, 4, 5 at the very end. Alternatively, it is sometimes not a 5-wave pattern at the end. In a double sideways or D3, you can have an ABC at the very end as well. So you can see it's the same structure, but the end is a little bit in a different shape. But overall, this is exactly what we got here. It is an ABC to the downside, an ABC to the upside, and something here to the downside. And this is in conflict to the first one, which is a sharp corrective pattern. You can see here is maybe a zigzag or something like this. So I would estimate that this is a first wave, a second wave, a third wave, fourth wave, and now we are in a fifth wave. Not knowing where this exactly ends, but typically if a market is not pushing forward anymore, you can see that the market is now reducing speed, the momentum is going down, and you can also see the movement we have here is looking very strong, like something like the shape is like a triangle or something like this. We call this an ending diagonal, because it's at the end, it's still pushing into the direction of the trend. And pattern like this, especially with overlapping and slackening speed, they are looking very corrective like. But corrective pattern into the direction of the trend are not possible or not typical normally. They can be part of a overhead correction or something like this. But in this case, I would strongly estimate that this is the last wave of this up move we've seen here before. So in this case, let's do it roughly like this. We have something like a first, second, third, fourth, and now the fifth wave. Unfortunately, I have to... The fifth wave is not given. I'm not sure where the end of the fifth wave is, so I just draw it here. It's not that exactly there. We need to see the end. It can be a little bit higher. It can be already seen, maybe. I'm not sure about that, but I'm quite sure that this pattern, what we've seen here, is not in the best shape to give us a really nice bullish perspective currently. And the lower time frames, for example, the 15-minute charts, or if you see this here on a bigger scale here, you can see that the 4-hourly charts here, or the 15-minute chart, is not pushing forward anymore so strong, that we have a lot of overlapping action here, and this seems to be at the very end. I also choose to show you some kind of an oscillator. This is a self-made oscillator we use for our own trading purpose, but you can also use something like an RSI or a CCI, for example, or maybe the momentum indicator, the stochastics. All are showing roughly the same. Of course, an overbought situation, so I'm not recommending using this as a trading idea alone, because of course sometimes at exactly that point here, we have a perfect situation to enter the market short, for example, or here it's a little bit too late, to be honest, to enter the market, but it's giving us an indication where the market is now. And of course, after such a strong move here, the market needs to be overbought in this case. But also on a lower time frame, this was the weekly chart. Also on a lower time frame, we have something like in the daily chart, the same situation. You could see that in this case, the indicator is also giving us an idea that the market is here in an overbought situation. Why did I show you this part? Because I think it's really important, and most traders in my eyes are using indicators really wrong. They just take an indicator using some secret numbers in here, or using the standard numbers, the typical numbers you can read in any book. But I don't recommend this. I think it's really important that you adapt these numbers so that this is fitting to the previous moves here in the market. And you can see this one is really nice in sync. So if you have a high here in this market, we have a high also in the indicator. A low here, a high here, a low here is also synchronized here. It's of course in this pattern, it's not really easy to find these spots, but you can see also here in all these here, you have roughly the idea. It can be a little bit with the latency. It does not need to be exactly on spot, but it's roughly showing us where the high end and the low end of the market is. And this market is also reaching the high end again. So we have some synchronized situation here with the weekly bars, or the weekly chart here. You can see we are overbought and need to turn around. And also in the daily chart, we are overbought and need to turn around. So this is not giving me a trading signal, but this is giving me the idea of searching for short situations. Currently, I don't see any. If I check the chart here, I don't see any situation to sell the market short. Even the last part of the market, you can see this here, is still something in a really typical corrective pattern. So I would think that the market still has some chance to gain any more, a little bit higher. So I think it's not the best situation to sell short the market at the very moment, but I think we should prepare for something like this, because indications are that the buyers are not willing to buy anymore at any price, that they may, that the buyers dry out a little bit and a little bit more cautious, waiting for a good situation to enter the market, or for some price setback to have a cheaper price to re-enter the market later. So if you are long already, you should keep in mind that the market at nearly any time from now can drop quite sharply. What is sharply? Well, how far is far? The minimum I would expect is something to set back a movement like this here. To find out a situation for this, or a level for this, you can draw something like Fibonacci from the lowest end of this chart to the highest point, which is not given maybe right now. Currently it's roughly here. It can be a little bit higher. I'm just drawing it here. It's not recommended to think of a high here exactly. It's just an educated guess that somewhere around this level, and this would give us some Fibonacci retracements around these levels here. The 38.2, for example, at 4,055 is quite near another typical level, which is the low of the fourth wave, which is roughly at that level here, 4030 roughly. So it is not a perfect guess that the market exactly will go there, but a setback like this would be really, really typical, and it's a non-event in the big picture. Even this is not killing any bullish momentum here in the market, as long as we are staying roughly in this area here. As long as the market is recovering from that point, we will talk about that in a later video. It's too early to say something about that, but as long we still have a chance that the market will recover, but of course there's a risk. So if you don't want to wait until these levels here, you should trail your stop a little bit closer now and think of taking some profits, maybe not selling short the market. I would not recommend this at the very moment, but I would say be prepared at least. You can also buy some put options, for example, if you prefer this, but not to be naked, plain vanilla long in this case. This might be a little bit dangerous when the market really starts to turn. If you want to wait a little bit more, it's absolutely okay, but you should expect something like a sharp drop. If you see a sharp drop, and especially a sharp drop in combination with a weak counter move. If you see a sharp move into this direction, an ABC, or a shaky move to the upside, it is really, really to be expected that the market will continue another time here to the downside and reaching the targets I've named before here on the lower time frame. So this is my idea with the S&P 500. Let's have a short look at the at the Dow Jones as well. But roughly said, we have the same situation here as well. I just want to give you a brief idea about this one. The last sharp move was a strong move to the downside, but we are really shaky here to the upside, turning around a little bit. This is not a perfect situation. However, as long as we are breaking through the upper levels here, we can still continue to the upside. Even in this case, I would say take care a little bit, because the setbacks were quite strong and some kind of overlapping here, even overshooting over this level here. It would not give me a really bullish stance here in this case. If I want to buy a market like this, I would go to a lower time frame, for example here on a 15-minute chart, and if I have something like this followed by an ABC pattern or a shaky pattern here, I have a chance to enter the market here. But you can see my targets, I'm not sure how far the target is. It can be way up, but it can also be only just something like this, like an ABC pattern here, and then turn around again. So don't overestimate. If you want to keep the position running, you may trail the stop to your entry and say, okay, if the position is still running and the market is gaining, everything is good. And if the market is turning around, okay, it's a 0-on-0 game here. You will lose your book profits, but everything is okay. You're staying safe. But don't believe that the market is pushing without any setbacks. Of course, if you can stand also bigger setbacks, could be something sized like this, for example. You can see we had this here on the weekly chart. It was 29,200 to 26,000 and a little. So if you can stand setbacks like this without feeling bad, then it's okay. Maybe you don't need to push yourself too hard. But I can also imagine that the market is in the situation to turn down a little bit stronger, because we have a changing situation now with inflation. We have a changing situation now with the interest rate situation, for example, with the Fed rates decisions, not the rate decisions to be honest, but the buying or pumping money, fresh money into the market. This might change due to the current situation a little bit, and this can hurt the market as well. We have some good news for all the Nasdaq guys. Currently, at least, we have a strong situation here. It's the best picture currently, and this might be also because of the US Treasury notes coming up again. So higher prices at the US Treasury notes mean a negative impact for the yield curve, and we know that the yields are really bad for the tech titles or the tech stocks here in this case. So in this case, I think that the Nasdaq is in the best situation, but even the Nasdaq currently has some, it was a really good situation. You can see here on a lower time frame, we had a 1, 2, 3, 4, 5 wave as well. I'm not sure this is the end, of course. Don't get me wrong. but I also see here the chance that the market will turn around. I also introduced some kind of an indicator here. This also our own indicator, the Born oscillator here, but you can see it is nice synchronized here in this case, and you can see it is time for a setback. This not necessarily means that the market needs to plunge really far and very fast, but it can be a bigger one. It even can be something similar to this one. I'm not sure. This is completely from the table. I can think. I can imagine that we can have something like this as well in the very moment. So you should keep this in mind for your own positions. That the market is not in the worst situation currently for buying on a lower time frame, especially this one, because we still have a quite strong momentum here on the lower time frame. But on the bigger time frame, we should expect something like a setback. It might be only a smaller one with the Nasdaq futures, but it can be a bigger one with the value stocks or the blue chips. So please take care with your own decisions. I'm not recommending to sell short the market at the very moment, but I recommend to think of taking profits. Maybe if you can use some stop situation or to buy some put options just to secure your profits and to secure your positions. So this is from my side. This is what I see currently with the markets. It's not a recommendation to do something like this or that. It's just a recommendation to have your own thoughts on the market, sharing mine. In this case, to give you some perspective, what I'm looking at in the market. I'm a trader since 3 decades roughly, nearly 3 decades intraday, for example. And I've seen so many good but so many bad situations as well. So I just want to share my ideas and my experience with you in these videos. If you like what you've seen, then please press the thumb button and of course subscribe to this channel so that you can see when I have another video as well, so that you will be and press the bell so that you are informed when the new video is on. So thanks for your time. Seeing you soon. Have a good time in the markets. Bye bye.